example is that TVTX PDUFA with the warning label. I made a good trade in that, and I got pretty good size, but I covered a lot of it pretty early to kind of cover my risk and then like let a little bit of it ride. Whereas I probably should have been hitting a little more once the trade started working. And I think that was a result of one, not having the real conviction yet to put on the size and scale up the trade. And two, I was down going into the trade, and I'm trying to get over this, but it still does affect me, the P&L going into some of these situations. So
I have a little bit of a different take on that.
Okay.
Yeah,
I'd like to hear it.
I do think, look, we're discretionary traders, but I do think what makes those decisions easier in real time is if you have some sort of preset system for how you're going to treat that trade. So you say to yourself, okay, I've got this trade and it's worth this amount of risk. And if it starts to act in a certain way, then I'm going to add to it.
Mm-hmm.
I think you're leaving too much to the whims of how you feel at a given moment. If you thought about that prior, you should really have a standard playbook for, hey, I'm definitely taking this trade. Hey, I'm definitely adding to this trade if. And when you're sitting there in real time and you're seeing it happen, you're like, oh yeah, wait, I've decided this already. Like, this is the time where I should add to it. And it gives you a sense of calm.
Mm-hmm.
And it gets you to start thinking about just doing the right thing.
Right.
It moves away from, am I going to make money? To, I might not do the right thing.
Yeah. And
this is setting up for one of those trades where I've already predetermined that I want to put on more risk. The right thing for me to do is to put on more risk.
Yeah.
And if you haven't done that preset thinking,
mm-hmm.
I actually don't think you're gonna. I wouldn't expect myself to really get that right so many times in real time.
Yeah. It happens so quickly.
Yeah. 100%.
No, I mean, 100%.
I'll say one thing, which is you want to be super specific about all of this. I'm using very general words.
Yeah.
But Lance is super specific about this. And I'm not saying you should be a systematic trader, but what I'm saying is you should have a system and a playbook
for the trade
for how you're going to do it. And not every trade is going to be the same. But if you've thought of 9 of the 10 things you need to think about, now all you really have to do is think about 1 in real time instead of 10.
Yeah. No, I think that makes a lot of sense.
Solution summary. 1, build a system for trading specific trade scenarios. We say build a playbook. All right. 2, be specific with that system. No, be super specific. 3, leave room for your discretion while in the moment, as you are, remember, a discretionary trader. All right. 4, when that trade visits, shift your mindset to focusing on whether you have the appropriate risk on, not on whether you're going to make or lose money in the trade. And then finally, 5, let the results be what they will be. I do hope you found this video helpful.
Look at Facebook. Facebook is a market leader. It is a stock that when it is in play is a very good stock for short-term traders. And the reason why I decided to use Facebook in today's video is when I looked at the price action from the last few days, there was a bunch of very good short-term trading lessons that I think can be applied, or I know can be applied in many different scenarios. So I kind of want to walk you through these five lessons. Number 1, compression before expression. Number 2, second day play. Number 3, how to use an ATR extension. Number 4, how sometimes we can have a week in a single trading day. And finally, knowing and understanding what is the news that is driving a stock and how that can be important. Lesson number 1, and this is one I've been talking about for a long period of time. It's known as compression before expression. And in the case of Facebook, they reported earnings about a week ago. And following the earnings were very good. It gapped up a huge amount and then moved in a very small range for 3 or 4 days. In fact, the range was about $4. So we had day 1, immediately following the earnings, we moved around a bit, but then 3 days of very tight consolidation. When I mean very tight consolidation, the intraday range was about $4 3 days in a row. 1 ATR in Facebook is about $8. So that's what we call compression. And when we have compression for 2 to 4 days, quite often after a catalyst, we'll get expression, either a break to the upside or a break to the downside. And on the 4th day, boy, did we have a break to the upside. Now, it wasn't just a technical break, and we'll get to this a little bit later in one of the other lessons. There was some news driving it, but it's very important to set alerts at both the top area of that tight compression range and the bottom area. In this case, we had 254. We've been looking at it since the day of earnings as a spot that if it got above with some strength to look for an upside move. And it turned out that worked, but it also turned into a multiple ATR move as well. And that will become relevant in one of the next lessons. So lesson number 2, second day play. So one of the primary things we do on our desk is we teach our traders how to trade stocks in play that have a strong news catalyst. And then often, many of those names that have significant moves on day 1 will set up for what we call a classic second day play. There's a few reasons why we love second day plays. Number 1, a trader of any skill level can trade this. It could be an experienced trader might trade a second day play with a lot of size and really pile on the risk because of how good of a setup it is. But even a newer trader, because of how specific the setup is and how easy it is to understand, a less experienced trader can trade that as well. Now, if you want to understand lesson number 3 for today, ATR extension. ATR extension just means, and I referenced ATR on lesson number 1, I believe, which is ATR is the average true range for a stock. That means that if a stock closes as an ATR of, let's say, $2 and closes on Thursday at $20, on Friday, for one ATR would be a close either at 22 if it went up one ATR, or at 18 if it went down one ATR. And usually the ATR, typically when you're talking about ATRs for a stock, it helps intraday short-term traders judge both profit targets and then also where a stock may fail in reverse, because we know statistically speaking in ATR we have a look back period of a month, 22 trading days typically, that's what it is on our platform I believe. We know what to expect in terms of a move for a stock. Now obviously if there's a fresh news catalyst, a stock can move a multiple of an ATR, and I get more in depth into that I think in the workshop. But as a rule of thumb, if a stock on day 1 had a catalyst, like in the case of Facebook, and I think that's lesson number 4 or 5, moves multiple ATRs, and then on day 2 has moved up another ATR, we'll look for that as a profit target and also a spot for potentially to fail. And so for today, after it moved up one ATR and it got to the 73, 74 area, I actually looked to short it. Now in that case, it only pulled back about $1 or $2 before it went up again and was up 1.5 ATRs. But then I tried it again, up 1.5 ATRs, and eventually failed up 1.5 ATRs and came back completely. And we'll get into that I think in lesson number 4. So that's lesson number 3. ATR extension works on both the upside and the downside, especially on day 2. So lesson number 4 is what I like to call a week in a day. And in this case, Facebook, in today's trading action, really presented a week's worth of setups in one day. And part of that was because it had such a strong catalyst the prior day, and there was strong follow through. But if you look at this particular chart that I labeled, there are 6 or 7 different action points. And I think I took action on about 4 of these different points intraday. So let's walk through the different action points. Action point number 1 is relating to the second day play, but it broke above the afternoon resistance from day 1. And that is a spot where in the second day play, one of the 2 spots we would look to get long. Action point number 2 actually served as a profit target as also a potential failure area. That was up 1 ATR in the morning. In that case, it got there pretty quickly in the first hour or so. Action point number 3 was 1.5 ATRs, is where I put on a short. Action point number 4 is where we got confirmation. We actually had 2 strong reversal bars where I added to a short position to look for it to come back all the way back down to point number 5 in the low 270s, where we potentially would look for support. I played it on the long side at action point number 5 because it had pulled back at that point a full ATR from 278. We know the ATR in Facebook is around $7 or $8 or so. And so when it pulled all the way back there, looked to play it on the long side and played it back up to that top blue line, which was action point number 6. I was actually off the desk, so I just put up some offers into action point number 6. But once the stock is reversed and has been up quite a bit 2 days in a row and bounces back up to an area and starts to fail, that would be a spot where we would look to reshort again as well. And then action point number 7 was when it took out the pullback low, meaning 270, somebody who's trading momentum to the downside would look to short on a momentum basis. It's almost the opposite trade of action point number 1 right on the open, where that was a momentum long to the upside. Number 7 is a little bit riskier 7, right, because it's already sold off a full ATR, but there's going to be some more people who are caught and trapped who bought into that pullback into the low 270s, and when it takes out that low, point number 5, people are going to hit out, and so momentum people looking to short might use that, people stopping out as a spot to get short as well. So that was a lot of different points where you can make trades. And then also, if you think about this, if you're looking at this chart, and I've labeled this with all these numbers, think about if this was like a daily chart, swing traders would be using these points if it's closing above or below them for swing trades, and we can do the same thing on an intraday basis, and that's why there was so much opportunity in the stock today. And then the final and the 5th lesson, which is actually the first lesson that I thought of this morning when this stock came up in the morning meeting today, was why maybe I thought I might do a video on it, was what is the news? And so the way that the morning meeting works is at the top of the morning meeting, I do the fresh in-play news, the stocks with catalyst. We go through our proprietary process for selecting those stocks. And again, I spend 30 minutes teaching that in the trading workshop at tradingworkshop.com. After I go through those stocks with fresh news, I then do what I call second day and technical plays. And I open that up. If we have time, if people have a stock they want me to look at, I'll go through those in the second day and technical plays. And Facebook was a second day and technical play, and had the really strong multiple ATR move yesterday where it broke out. It was a technical, but it also had a catalyst. And the person, as I was talking about in the morning meeting, I said, wow, that was a multiple ATR move. What exactly was the news driving that? Now we know right now one of the big things in the news is the president has been issuing these proclamations about TikTok, we're going to ban it from the U.S. We're not going to allow other stocks, Chinese companies to trade on U.S. exchanges. And this has been going back and forth now for a number of weeks, maybe even months, because we allow Chinese companies to trade on our markets, but there's no reciprocity there. And so there's been a lot of jaw voting going on. And what happened yesterday was Facebook, and you can see from the headline, Facebook and some of the other names were starting to move higher because I believe Trump said something like, we're going to ban TikTok, we're going to ban Tencent from being involved in our markets. And why does that help Facebook? Because Facebook, a couple of weeks ago, said they were going to do something on Instagram similar to TikTok. And so even though that news wasn't fresh yesterday, and the person in the morning meeting who was asking about the question said, oh, there's old news, there's no news. Something I learned very early in my career. Don't think that you know exactly what the news was driving the stock yesterday in Facebook. This person had assumed that it was because they had Facebook had announced Instagram was going to do a competing product with TikTok. That wasn't what was driving it. What was driving it was potentially any competition for that product was going to be banned in the United States. And Facebook is a winner again, just like they won when they took over Instagram. They might win with this competing product because TikTok's no longer allowed to exist in the United States. If we look at the chart here on the move yesterday in Facebook, it's very clear that there was news driving this. It was not just a technical breakout. The reason we know that because between 11 a.m. and 12 p.m., that's probably the lightest volume period during the day in terms of equities trading in the U.S. And you can see massive volume that I've circled that area right there. And much higher than the open. Typically, the highest volume is right on the open and right on the close. And when you see massive volume like that into a breakout, you know that's being driven by news. And so the fifth lesson is know what the news is, understand what it is, and don't assume that you know what it is without spending a little time researching it. And then on the flip side, now that we know what drove it up from 250 to 265 and then today to 278, let's keep our eyes open next week. If the deal gets approved and Microsoft is allowed to buy TikTok and they can compete, that's going to be potentially a major negative catalyst for Facebook. And that's why it's important to understand the news and be ready to take action when the next news piece comes in. So a lot of different lessons that are applicable. You can apply these across the board to other stocks that become in play. There were 5 of them. I hope you were able to take away a few of these for your own trading. And please in the comments, feel free if you have questions related to any of these 5 lessons, or you want to share how you use any of these particular lessons or how you traded Facebook. Share, we all learn from each other.
Video, you'll learn 8 important trading lessons that can drive improved trading performance by you. They are: 1, the importance of understanding the potential upside for a trade based on the news. 2, you can build a trading career catching small moves rather than the whole move. 3, being open-minded about a trade leads to elite trading. 4, find a liquid and volatile stock as opposed to just a volatile name. 5, game plan, great long and great short ideas. 6, embrace technology to help you make better trade decisions. 7, review well to internalize the best trading opportunities. 8, the importance of learning from a senior trader during your trading journey. You will learn these timeless lessons inside of a detailed trade review in a biotech stock trade with a trader on our desk with critical feedback from me.
So yeah, the primary reason I did this playbook was because this trade popped up on our scanner, and I was looking for a spot to get short this, and I think I was coming in with a not the right bias on this news and this catalyst. I was coming into some resistance levels and pretty extended on the day. So I had been finding some edge in trades that are up 4 to 5 ATRs and above 2 ATRs intraday. So I was short bias on this, but given the catalysts and the news, and once we broke through that levels, I think there was a great opportunity to get long this. AXSM, they achieved their primary endpoint in phase 3 trial of Alzheimer's disease agitation. So this is not a drug to treat Alzheimer's, which BIIB, Lilly, they're working on. This is a drug just to treat agitation. So when I was looking at this, I was thinking those drugs are going to be worth billions and billions of dollars. Now, I don't know exactly how much this drug is going to be worth, and you really have to know the background information when you're putting on trades like this, and you have to really do your due diligence and know all this information. So this was actually great to experience this, because now I know where to put myself as far as having all that data in one place and skimming through that and knowing the bigger picture. Just to put yourself in a place to make a good trade. And I think you as a trader, you need to do that, because having that confidence with that background, you're just going to excel when it comes time to push the buttons.
I'll just chime in here, make a really, really excellent point, and this is an important trading principle. When you're choosing your stock, when you're making your stock selection in the morning, understanding the potential upside of the news catalyst is super important. And obviously, if you're choosing news catalysts that aren't going to really offer you a lot of upside, you want to take that into account. But the bigger the news catalyst potential upside brings, that's got to be factored in. You may have to trade that differently. You may want to put more risk on. You may have to deal with sizing differently. But I love the fact that you pointed out, hey, this is something that has unusual potential upside.
Also understanding like the pipelines of these companies as well. Like if they're a good company, if it's they're just jumping on the train and trying to make because people are just throwing money at Alzheimer's drugs right now, because it could be a huge breakthrough for society in general. So, AXSM, they've had some other drugs that just won approval for one of their other drugs as well. I believe the name is Auvelity, and it's a release tablet for the treatment of major depressive disorder. So yeah, next slide. Here's the pipeline drugs. The Alzheimer's disease agitation is in phase 3. The AXS-07 received FDA approval, and some other drugs as well.
Little known fact about me.
We knew that it wasn't a cure for it, but there is an unmet need here. Which is huge, right? So there isn't a drug out there that can give people the type of relief with the symptoms that come with Alzheimer's. So the analysts are conservatively predicting that this drug alone is going to produce or bring in 1.5 billion. And these successful trials, other drugs that have had successful trials in the Alzheimer's field have been catching huge bids on the news. And if you look at BIIB, their market cap is 42 billion, since trading 16 times its revenue, which is pretty crazy. So another thing with AXSM is that it has attracted a huge short interest, and you can attribute that to the previous drug that was approved by the FDA. There was a delay on the approval. There was some issues there with their paperwork, I guess, and people probably think that this could spill over, if they're not being really diligent with their, with their work and making sure that they get approved on everything, that this could spill over with this drug. And then also, given the current average volume, the daily volume, with that amount of short interest, it would take shorts 5 days to get out of their positions if it was trading at the average volume. So intraday fundamentals, 1.8 million average daily volume. On this specific day, the R vol was 10. The ATR is $6. The short float was 19%, which is pretty high, really high actually for a stock. And the market cap is 3 billion, and its institutional ownership is 60%. So execution strategy on this trade, there are multiple trades that you can make depending on how we open. So in this specific scenario, the way the stock traded on the open, I think the best trade was the momentum.
So Andrew, if I could just cut in, we want to make sure that we're scoring each of the 10 principles that go into making a good trade. So one of those principles is stock selection. I'm just curious, on a scale of 1 to 10, how good of a trading opportunity do you think this is?
I would say probably a 9.
Yeah, I actually wrote down 9 too. And the only reason why I wrote down 9 and maybe not higher is that A, sometimes these stocks can be a little bit illiquid, and B, sometimes it's hard to truly understand how significant this news is without having a really strong background in biotech. At certain firms, there are biotech analysts who are going to run over to the traders, at a hedge fund-ish type thing. They're going to run over to the traders and they're going to give them a lot of color on how significant this news is. And so, we do a little of that, but that's not quite what we do. And so I just feel like our news edge is a little bit unknown. This is definitely a news catalyst, but sometimes we get this stuff. Sometimes it's a little tricky to understand the news without having a real background in biotech stocks, a specialty in that. So, but yeah, I definitely agree. I think it's a 9 out of 10 in stock selection.
Yeah.
All right, trade strategy. Go ahead.
You bring up a great point, because I don't know if you were looking at RxDX today. It's similar setup, huge gap up, and RxDX tried to push through and then failed, and now it's down $15 off the highs. So they are risky in that sense. And I also think it's important to change the narrative as price gives you more information. So watching for the first 5-10 minutes, see if the bids are sticky. And I think especially with a stock like AXSM, where the spread is pretty big. So this was kind of an issue. I was talking with Shark to this real time, is just banging in and it pushing through and then stuffing. I feel like that's kind of risky. I don't know how you feel about that, Bill, but I almost would rather try to anticipate that move and try to get in from lower prices, where you could have a decent stop and not lose so much if you're wrong.
I just think they're different trades. So there's going to be some people who can really master a breakout trade or a momentum trade in that case. And there's going to be other people who really master that consolidation before the breakout. Mm-hmm. I like the idea of you trying to figure out if you like one over the other. I like you certainly tagging and measuring where you're having the most success in those particular trades. I do think in this market that consolidation before the breakout is a better way to be trading in the market conditions that we're in, which are a little bit choppy to downish, though we've over the last couple of weeks shown a little bit of strength relative to prior to that. In a strong up market, I think you're fine trading breakouts.
Yeah, that's a great point. We're seeing less follow through on breakouts.
Yeah. So measure the trade. I think you should have a sense as to which one you think you like best in this market. Just tag and measure it and keep your trading stats on it and verify that is the best way to attack this, because it's a good opportunity.
Yep. The trade time is to watch price action open. As price coming to important levels, 72 was the 6-month high, 74.50 is 52-week high. So we're coming into resistance levels. It's a heavily short name. So if you break through the resistance there at 72, it could get squeezy. Take a momentum long through opening range break, or momentum scalp on high volume. Reasons to sell would be break and hold below the key level. A fail follow.
So I just want to jump in here and highlight a really important point. Not everybody's going to be as sophisticated as you in trading who is listening to us right here. I think a lot of times when a big news catalyst like this comes out, people feel, particularly newer traders, feel like they actually have to capture the whole move. And they feel pressure to be able to figure out how to capture the whole move. Well, should I just fade this on the open and capture the 16-point down move that you just mentioned in the stock you're watching today? Or should I try and buy that consolidation before the breakout and catch a 15-point up move to the upside? And they actually just feel this pressure to be able to do that. And what you're doing here is super savvy and the right way to be thinking about it, which is, look, we're active traders. We don't have to put the pressure on ourselves to capture a 15-point move. It's okay to capture a move. It's okay to capture just a nice little move, up or down, and to start to build out our playbooks, to be looking for these moves that you can capture, as opposed to having to capture the entirety of the move. So I wanted to highlight that that's perfectly acceptable, profitable, opportunistic way to be building a playbook. And then the second thing I really want to point out, which I think got a little bit overlooked from your comments before, and is super important for active trading, is how you're being open-minded, how you're planning to be open-minded about the information that comes in on price and volume when you're watching the stock. And there's somebody, like the other day, I thought the market was going to go down. I'm on the call. I'm saying to guys, like, I think the market should go down. The news dictates we should go down. The news dictates that inflation is more likely to go up. This is a bad sign. We should go down. And what happened? We went up all day. But in the morning, what was interesting is I was just saying, and I actually chatted with Shark about this while we were watching the real time. So I'm game planning. We should go down. We should go down. We should go down. We should go down. And I'm saying on the Discord call, well, that first move is not indicating we should go down. Well, that second move, that's not information that we're more likely to go down. Wow, that third move off the open, I'm not seeing any evidence that we actually should go down. I'm not seeing any evidence on the tick. I'm not seeing any evidence on the price. I'm not seeing any evidence on the volume. All I'm seeing is actually breadth of up move. And Shark and I were chatting back and forth. And I'm like, I'm surprised that we haven't gone down. And he said, yeah, the price action's not that bad at all yet. I think it's going to go down too, but the price action's not that bad yet. And I said, I totally agree with you. And so we had game plans for the market to go down. I did, and the younger guys on the call did. And I made a couple of trades on the short side, got stopped out, totally manageable. But since I was observing that the price action was not confirming my thesis, as a short-term trader, I'm adapting. And so that's a huge, huge structural edge that we have, which we always need to be using, because we don't have to be short. We don't have to be long just because we think a stock should go up. We don't have to do that. Hedge funds have to do that. Hedge funds have to sit in Peloton for 3 years, God forbid, or Zoom, God forbid, or Shopify, God forbid. We don't have to do that. All right. So I wanted to highlight those 2 points. Thank you for pointing them out.
Thank you. Yeah, so reasons to sell, break and hold below the key level. If you're obviously long in this situation, feel follow through and stuff at a key level, and overextension to the upside and heavy volume, 2 to 3 ATRs above VWAP, which is a trade strategy that I have been working on, where I've been seeing some edge. So if in that event, if I'm long, it could be a good sign for me to take some off.
So if you have to grade yourself on your trade strategy here for this playbook, at a scale 1 to 10, how are you viewing this? Is this a 9 out of 10 trade strategy, 7, 8, 10? What are you thinking?
Considering that this trade plan was after the trade played out, I pretty much made a perfect trade. But this is like Monday quarterbacking. But so the key is, I feel like doing this in real time is what you want to do. But if I were to grade myself on this trade strategy, it'd be probably a 9 out of 10.
And that makes a lot of sense to me. I think that's probably right. I think this is a good, and what you want to be thinking about when you're game planning and get to the habit of is, what's a really great long? What are the variables for that? What's a really great short? What are the variables for that? And being disciplined enough, discipline's not the right word, but waiting for those better trade strategy opportunities. And you're certainly crafting one right here. All right, let's move on.
All right, so technology, as with any great trade, it starts with an alert. So we actually have a great Google sheet that's shared around with a bunch of the guys, and we tag all of the upcoming catalysts that we feel could really move a stock. So we basically have all upcoming catalysts, and we have in there, so Google actually has a great feature in Google Finance. You can actually bring up the market cap, you can put the ticker, and it just brings up the market cap, and you can add the value to the stock, and it will give you the current price and the potential percent move that we can get off this catalyst. So that is a really awesome thing we're doing there with a bunch of the traders. We have a gap up scanner with average volume that's over 1 million, RVol scanner with RVol over 2, a 3 times ATR scanner, anything up 3 ATRs on the day, and a percent change scanner, which I like to use in the pre-market to see if what's up 5% or more, or down 5% or more, which would probably indicate there's a catalyst, and you add the volume in there, and that's where I would kind of look for in the morning. And that box there is, I don't have the AXSM one, I didn't take a screenshot of that, but this is just one from yesterday, so you can see what the RVol and ATR scanner looks like.
And grading you on technology here, this is what we're looking for. This is a 10 out of 10. I also want to know a little bit of backstory to this, which we discussed offline, which is that you collaborated with another trader. Should we give Dan D a shout out?
Absolutely.
So one of your colleagues and you collaborated on how to use technology for this trade, which is great. Big part of what we do here at the firm. How do you help yourself as a discretionary trader make better trade decisions in real time by using technology? This is an example of building alerts and collaborating with other traders to be able to do that. So highly encourage you to keep doing work like this.
So we're looking at the sector, bigger picture. So you kind of want to see where XBI is trading. And in this case, it was in a tight range. I don't think that, yes, the market, if you want to take a look at the market and have a bigger picture, but I would say that this catalyst will move differently than the market, unless we're in a really big catalyst market day where I would say the VIX is at 30. Would you agree there, Bella?
I would. What I'm looking for here is, are we near a particularly important breakout price or breakdown price? Are we trading particularly weak or particularly strong in the sector? That may give us a little bit of color as to how strong or weak we may think the stock will be on a particular day. We're in the middle of the range here. I completely agree this is going to trade stronger than the sector. I like that you're looking it up. I don't think this is going to be a huge influence on our trading, but it's an excellent best practice to check it.
Great. So technical analysis on the daily. Now this is on the gap up there in that gap. This is the day that we're looking at. So this picture was taken a day later. So price was coming into short and long-term resistance levels, so 72 and 74, which were longer-term resistance levels.
All right, good. So we want to find, hey, here are prices where we want to be long. We're more likely to be long. Breakout areas into support areas. Here are areas where we really want to be short. What advantage can we gain trading today, trading the stock intraday based on the daily chart? A lot of times the best trades, you have alignment with the daily chart and with the intraday chart technically. And so that's what we're looking for here. So good job understanding where those super important prices are in the daily chart. Very, very good best practice for that. All right, let's go to the intraday.
With such a high short interest on a strong move up coming into important daily resistance levels, you want to watch price at these levels. So
I just want to clean up a couple of things, Andrew. So let's go back to the big picture. We need to be adding to the big picture where we are in the overall market and what the overall market is concerned about, and we're thinking about making a trade. So we want to say, not just, hey, what the overall ETF, the most important ETF is doing, but, where are the Qs, where are the SPYs? Are we below important ranges, above important ranges? And just get an understanding to how strong or weak the market is, and are we getting below important or above important levels? And obviously, if we're waiting for Qs and SPY to break above a seriously important level, and you've got this positive news catalyst, that makes the trade more likely to work. Obviously, if we're in this, we just broke to the downside the day before on heavy volume, and now we're trading the next day, it's going to potentially weigh on the stock going up as much as we would think. So just in cleaning that up for the big picture, we want to be adding that. Make sense?
Okay. Yep.
And then the other thing is for technical analysis, you want to be thinking about not just the daily, but also intraday. So what is the intraday super important prices? Maybe you're going to point that out in your trade management side. Maybe there's going to be a little bit of an overlap with that. But for us to have strong fundamentals, I know you can appreciate this as a professional soccer player. We want strong fundamentals that leads to better performance. And so we want you thinking through this as cleanly and fundamentally strong as possible, so you get as good as you can be.
Yep.
Daily chart, where the important levels, and then intraday, where the super important technical levels, and understanding that. All right, so let's go to that trade management.
Yeah. So as I was saying, I did have dots here to indicate these price levels, but they're not showing up for some reason on Google. I popped over into Google. So I think a pretty important catalyst here would be the short interest, and on such a strong up movement coming into that daily resistance, you're going to see shorts appear to defend these resistance levels and try to push this down. So the shorts will appear to defend these resistance levels, and once we base and we can't go down more on the open, so we're watching this for 15 minutes on the open, we can't go down, we can't go up, and now we're consolidating. And once we base and put pressure to the upside and break through that pre-market high, which happens to be 72, which is a very important level on the daily, shorts are going to be scrambling to cover, tripping over themselves, and that is where I think on the volume, if you can see my mouse there with this volume here at 72, I feel like this is the best entry for the long here, and you could take a momentum scalp. And what I like to do when I take a momentum scalp is enter here before the break and sell some into that overextension and put yourself in a good position to possibly make a great trade and hold on to some.
All right, good. And just cleaning up, scoring you for technical analysis. So you did a good job pointing out the daily chart and where the important levels were, and now you're doing a good job here of pointing out the intraday level that's important to you. I'd like to see a little bit of a better level. I think a level that's touched more. I think a level that's closer to where the stock had been trading previously gives you a little bit more advantage. So like some consolidation before a level that couldn't be breached and then gets breached. Meaning like your 72 level is a level, breakthrough open, but I think there's better intraday levels that you'll come across. So we'll call that a 9 out of 10 for that. Sorry to interrupt you. Finish up this trade management.
No worries. So if we look at the 5 minute, as you're looking to take profits, there's going to be a lot of noise on a 1 minute chart. It's not going to be so clean. That's something that I've noticed and have been working on, is managing my trade on the 5 minute rather than the 1 minute. So for me, a good tell of exhaustion is volume peaking, and I like to use this to cover any momentum move longs that I have. If you can see on the arrow there with that high volume candle at the highs. Also, it's up 3 ATRs on the day, which is a good candidate for an overextension short and a good reason to take the trade. If I was looking for a reversion trade, I would think about I'd be watching the price action here at the highs and see if there was a trade that I could take this back to VWAP. Managing trades on a 5-minute chart will give you a better picture of exit strategy. And personally, I like to use this 5-minute chart over the 1-minute chart.
So I like how you're being specific about the type of charting that you like over others. I like to look at 2-minute charts. Some people like to look at 1-minute charts. Some people like to look at 15-minute charts. So I like how you're thinking through that for yourself. I really like the way you're using ATRs into your decision-making process. You know, when I'm thinking through this in terms of trade management, you're finding a level to get in, you have a stock in play. The one thing I just love for you to add to this is where you'd be wrong if the trade lost money, and get into the habit of pointing that out. But in terms of trade management, this is how you should be thinking through the trade. I particularly like the exit, and that's a 9 out of 10. Let's see what you did on review, Andrew.
So trade review, given the high short interest in AXSM, there's always a potential for a squeeze on a name with a hot topic with an unmet need, which is Alzheimer's. Once we cannot break lower, shorts were scrambling to get out. Once we broke through the long-term resistance level on volume, there's perfect momentum long through 72 on high value. Factors that made this trade work had a positive catalyst. It's a hot topic, high short interest, approaching long-term levels. The RVOL was extremely high, and you're mixed that in with buyers chasing this positive catalyst, and its valuation was much lower than other Alzheimer's names.
I really like how you're going over the reasons why this trade worked. I think that's an excellent best practice. I think that really helps you internalize the trades. So when we think about how we can trade better in real time, the reason why we do these playbooks is we're trying to internalize these trades so that when we're in real time, we're like, oh, wait a second, I remember that trade. That's a part of my playbook. And I remember that if I have these variables, then it's more likely to work or not. And so that process you're going through right there is super effective. Not every trade is the same, but lots of trades are similar. You're kind of making these in real time comparisons. So maybe the next trade doesn't have 1 or 2 of these, but it has the others. And that's enough for you to have a little bit more confidence in playing this on the long side. So that's a really, really good best practice. The one thing I just would love to see, and I'm sure you'll do this going forward, is I'd love you to crunch your stats and tag these trades and let us know how well or not well you trade these particular setups. I'd encourage you to add that to your review, but this is how you do a good review, and that's certainly at a 9 out of 10. You get one more score on diligence of presentation, and we're gonna come in at 8.5. I would like for you to clean up the big picture part of it. I would like for you to talk a little bit more about reading the tape when you are talking about a trade. So is there something from your tape reading skills that you can highlight, demark, and remind yourself as being particularly important? I think you talk a little bit about that in terms of what the chart looks like, and I think that's fine. I do think there's more information from the level 2 that is particularly helpful. In fact, it's interesting. We're building this new course for you guys internally on scalping, and Jeff, I know, has been working with you guys on this new, on sort of being a sounding board and workshopping some of the scalp trades that he's made. And we are actually doing a lot of these scalps on charts because not a lot of people actually know how to read the tape. But if you listen to Lance, and I'm sure if you listen to Shark, they will tell you the importance of actually watching tape over again and building those tape reading skills to give yourself a little bit more edge. And so when that stock breaks out, you want to record that part of it, go watch it back, and see the nuances as to what it looks like when it's really going to work. And when it gets to 3 ATRs and fails, you want to go back and watch that and see the nuances to why it fails. And I do think you want to be including that in your review. And I don't think that's just from the charts. So I think that's a 7.5 on your reading the tape. Okay to be doing on charts, even better to be doing it with your level 2, given that we use that. So Kurt's gonna tally up our scores. And the idea here is to give feedback to the trader as to, is this the way they should be doing their playbooks that is going to lead them to achieve their goals? And so for somebody like yourself, you want to be coming in over 85 for you to be achieving your goals to be the next Shark or better. Screw Shark, tell Shark you're coming for him. So on stock selection, we got a 9. Big picture, we're coming in at 7. Trade strategy, we're coming in at 9 out of 10. Intraday fundamentals, we're coming in at 10 out of 10. I think you did a good job with those. Technical analysis, 9 out of 10. Reading the tape, 7.5 out of 10. Trade management, 9 out of 10. Technology, spot on 10. Review, 9 out of 10. And diligence of presentation, 8.5 out of 10. And Kurt will tally that up. And what do we get, Kurt? 88. Congratulations. You passed this round. So appreciate you going over this trade for us. And again, the idea is to be, and I know you of all people appreciate this and probably think I'm a little bit anal when it comes to things like this. I want strong fundamentals. Every trade for traders to be thinking strong fundamentally, because I think that gives them the best reps for them to improve and the best experiences for them to get better. And so the more we can impress upon you guys to just be super strong on your fundamentals, we think the better you're gonna be. So, all right, great. Any parting thoughts?
Yeah, I think that all those points, really drilling that home, that makes so much sense. And yeah, you're right. I want to be the most fundamentally sound trader out there, just like any pro athlete out there is, their fundamentals. What separates the best from the average is that they do the simple things right all the time. you know, you want to stay consistent, and I think having those fundamentals is the best way to stay consistent. And you bring up a great point about the tape, which I felt like that was what was missing from this presentation. And I do review the tape a lot after the market closes, and watching the speed, especially in those moments, the tape just speeds up, and it gives you a lot of cues on if there's a huge seller, if we break through that seller, how do we react after that? And the speed on the tape will definitely show you.
Andrew, I'm curious, and I don't mean to put you on the hot seat here, but we love learning about learning. And since you are the only professional former soccer player in the firm or in the firm's history, if I were to ask you, what would you want to see? Let's say we asked you to go scout a particular player at practice, and you think fundamentals are super important for guys to get better. What would that mean in terms of the type of work you want to see from a player at practice that would separate him from the unsound, fundamentally strong player? Like, what would be an example of somebody who's strong fundamentally that you'd want to see during a practice?
It's a great question. I think it depends. It's hard to say that in soccer because you go through ages, right? So if you're saying like a 15-year-old, you want to see a certain characteristic from this player, a 12-year-old certain characteristic, and say an 8-year-old certain characteristic. But if I'm looking, if you say I'm a college coach, right, which we're looking for a D1 athlete, someone that could fit our system, what I want to see is how that player reacts when the team is not playing well, and how that player reacts in certain times of the day. I'm thinking of trade now. Certain times of the match when other players are tired. So say the 70th minute to the 90th minute, and see how his fundamentals are there. Because you're going to see a lot of players be able to make certain passes here and there, but can they continuously do that repetitively over and over and over and over again? And over time, what you'll see is that the guys who stay consistent, who don't risk too much, and in those certain moments in the game, when the pressure is on, they're able to make quick decisions and use those fundamentals.
I'm glad I asked that question.
If that makes sense. I don't know if I was too.
No, it did. It did. And I appreciate you letting us pick your brain on that.
Great.
All right, great. Appreciate the time, and we'll see you soon and talk to you soon.
All right. Thanks, Bill. I appreciate it.